Welcome to More TV, brought to you by moreforyourmoney.com. I'm Wes Moore, certified residential mortgage specialist, vice president and partner in Superior Mortgage Services. Today, I'd like to teach you a 4-minute video about the top 10 reasons for loan rejection and how to avoid them. Number 1, insufficient, unstable, or unverifiable income. Insufficient income is easy. Your eyes are too big for your stomach, as Grandpa used to say. You want a home that's $2,000 per month, but you can only afford $1,000 per month. If you really sat down and analyzed it, you would realize that may be tough for your budget to handle. Unstable income might be a commission salesman without 2 years of tax return to back up his income claim. Unverifiable income is an example of a self-employed person that says, I make $500,000 a year, but I only report $30,000 on my tax returns. The second reason is poor credit history. This is the number one reason for rejection. Past performance, i.e. your credit report, is usually a good indicator of future performance. All loan types have raised their minimum FICO scores in the last several years since the 2007 mortgage crisis. The third item for rejection is recent late payments, especially on your mortgage. Pay your mortgage first if you have one. If you don't, pay your rent and your car payments or installment loans first, then credit cards, and then your utilities. You can be late on your utilities, and 99% of the time, they never show it on your credit report. The fourth reason is too much consumer debt. Most people can comfortably afford no more than about a third of their gross monthly income for a house payment, and about 38 to 43% of their gross monthly income on all their debts. There are always exceptions, but they will need strong other compensating factors. Most lenders will not take over a 45% total debt to income ratio on conventional loans. FHA and VA are a little more lenient. The fifth reason for rejection is no history of ability to save. Is it really beneficial to put a consumer into a mortgage payment of $1,200 per month when they have been paying $600 rent and have only $400 in their life savings? It's definitely more prudent to make that same loan to a person who has been saving that $600 a month. Payment shock is one of the things underwriters look for. The sixth reason for rejection is inability to document the source for down payment. Now, down payments may come from savings, checking, retirement funds, gifts, secured loans, sale of assets, grants, or other areas. They may not come from an unsecured credit card advance, undisclosed signature loans, or other undocumented sources. Discuss the source with your loan officer or me, 505-249-4506, to learn more. The seventh reason for rejection is a low appraisal. Now, most of the time, a purchase appraisal comes in what a willing buyer and a willing seller negotiate. Realtors and savvy consumers usually end up at market value. However, we all probably think our home is worth more than it is, so refinances are where values can come in low. That can be a problem if a consumer is counting on a certain value to make a transaction work. The eighth reason is a significant increase in housing payment. As I discussed before, payment shock needs to be addressed with a budget, a written budget, or money left over in the bank, what we call reserves, available after closing. Reserves are savings. It is difficult to go from $500 a month rent to $2,000 house payment without a valid budget plan. The ninth reason is income calculated wrong by the loan officer. There are so many different income situations today that you really need an experienced loan officer that is familiar with lending guidelines for each program to determine your income. Overtime, shift differential, compressed work weeks, commissions, K1s, Schedule Cs, all have different guidelines. Make sure your loan officer doesn't learn about these guidelines 3 days before closing. The 10th and last reason for rejection is new debt. Do not buy anything on credit between loan application and closing. This may affect your qualifying. Don't be the consumer that buys a whole house full of furniture 2 weeks before closing, and then because of the new debt doesn't close. There are more reasons for rejection, but these are the 10 most common. Feel free to give me a call on my cell at 249-4506 to discuss your particular situation. I have been helping New Mexico families buy homes for 23 years, and there's just no substitute for experience. Remember to share this, forward it to your friends and clients. And as always, and until next time, I'm Wes Moore.